Preview.
So Michael, help me understand why I would want to hire a banker.
I think the realities are bankers are helpful because having somebody who is a third party who can go out and represent the company, but also be an intermediary. One of the biggest challenges that we see with CEOs or with senior management when they try to run their own sale processes is they get into the negotiation stage. And all of a sudden it becomes a negotiation where the decision maker on their side is in the room. So they don't have the ability to really say, I need to go back to the X, so-and-so. I think the other challenge too is that many buyers don't necessarily want what you're selling. And what I mean by that is when you've been building a company for a long time, you have a vision, you have a look and feel about what it's supposed to look like. And the buyer may be looking at it very differently. And often if you're selling only what your vision is, the buyer is trying to get around that and may become frustrated and may think, well, I'll just wait and see what's going to happen later. So a lot of different reasons for it, but having a third party in the middle helps provide that validity. It also helps because all your other parties in interest, whether it's your investors or your bank or even the directors, they know that basically there's somebody here who quote unquote doesn't have any agenda, is just trying to get something done. It gives credibility to the process. And to the extent that it ends up in not a home run process, but less than that, it's a way for everybody to be able to rely all the board, the directors and everybody else to be able to say, look, we hired a third party here. So we are being professional. We're covering our fiduciary duty. And we were able to do that.
How long does a typical banking process take?
It really does vary, but typically we see it taking 9 to 12 months to do a good quality process. Could be a little longer. It's broken up really by the first part, which is compiling all the information. In a typical process, you're going to want to put together a book, and that book is going to be extensive, and most of the times people will want to have all of that as well as a lot of the data room and diligence put together before. So call it a month and then also, I guess, identifying targets and targeting. And so a month to get into the process. And then a typical process, the bankers are going to want to go out kind of selectively in the beginning, at least, to start going to the parties that they're aware of that might be good candidates or certain other targets that have been recommended, as opposed to going out more broadly. So they usually start in a metered process to be able to kind of not signal too much that the company's in play and to work through it slowly, and then to bring people in and bring them along. And then there's usually more extensive diligence in these processes, which drag it along, as well as negotiations, depending on what the structure is. But usually, you're definitely talking, 9 to 12 months, I would guess, is the standard. That's what we've
Interesting.
seen.
And can it be done faster?
It can. But it's not your traditional investment banking process. If you're going to run what we call an accelerated sale process, that's a different process. It's designed to create more of an excitement around the transaction and an environment where you got to get in now. If you want this opportunity, it's not going to be here in a year or in 2 years. And so you're creating a lot of energy around it, but it's also a broader process. It also doesn't require as much of the detail to be compiled in the beginning, because a lot of times you've got limited runway here based on timelines, and that's going to drive what your process is. We typically see that runway being, call it 30, 60, maybe 75 days. And if you've got that, if your runway is that short, or if even your decision point is that short, you really need to be able to get into the market quickly and be able to do that. You also need to, if you're in that kind of condition, likely need to start getting feedback from buyers, because those are indicators to the people around the table about what kind of expectations there are, whether there is a likely buyer, whether people are interested. Because we can talk all day about the fact that this is really interesting technology or process or our customers or how we make things is really interesting. But the market's going to tell you what's interesting and not. And being able to get that direct feedback, that's really helpful to everybody because it helps to align their thinking and manage expectations in the process.